In the past few weeks, I've taken two huge wins trading options using nothing but ICT concepts, and honestly, they were some of the cleanest trades I've taken in a really long time. So, without wasting any of your time, let's get right into why I like options and then my setups. So, I won't waste much of anyone's time, but these are the four main reasons why I really like trading options. The first is pretty self explanatory. If you're trading on like Webull or Robinhood, some popular brokers with really clean options interfaces, the profits you make on any options trade are yours, meaning you don't have to have any set of winning days like a prop firm. You don't have to split anything for a payout. When you sell an option and realize the profit, it is yours. You can withdraw it, you can keep reinvesting it. It's up to you, but it's money in your pocket immediately. Next, you have defined risk just based off the fact that you know that you can never lose more than what the option was worth if you're buying the option. Next, it allows versatility. As you guys can see by the tickers, I've taken trades with options on MU and Palantir this month, which are assets that presented very clean ICT setups, but there's no way to trade those assets directly using futures or prop firms. So it allows that versatility. And most importantly, in my opinion, is that it allows you to swing trade if you're picking the right expiration and contract. Because as we know, on prop firms, which are what most of you guys in the space trade, you cannot swing trade. So let's get right into the first setup, which is MU. So first we'll go over the highest time frame context that I was paying attention to because that is always very important. And as you can see, in the end of February, or at the end of February, if you go into replay mode, we confirmed the creation of a monthly bullish fair value gap. Now, MU has been on a very insane run. It's a stock that's been showing strength, which is why I've been interested in looking for a pullback to long it for quite some time. So like I said, as you can see on this run up, we've created many gaps that have not been tested. We created this one at the end of February, and in March, we did end up dipping very far into it. As a matter of fact, into the discount of the gap, okay? So once I saw that, that's when I really went on alert to try to look for some longs. So we thin it back down to the daily time frame. And you can see that a lot of retail is probably going to think that this is some type of top pattern or some type of head and shoulders breakdown, and that, oh, we've broken the neckline, we're going back down to 200. That was never going to be the case. We were just retesting and rebalancing into a monthly bullish gap. And once I saw this candle right here, after this knife, this really violent sell off, we get a really clean hold here. That's essentially when I bought calls. Okay. And so I bought calls with like a month or 2 months expiration. I bought two different contracts, one of each. And I typically like to buy time on my contracts. It's a little more expensive, but if you're not right really quickly and you don't have much time on your contracts, like you have 2 weeks or less, you're going to start to lose money rapidly, even if the stock chops and doesn't go against you necessarily because options price in time. So this ended up working out really quickly. We'll go to where I was really ultimately targeting. If you look at the 4 hour chart, we had a gap here around 375, 380. And for options, that was my target. Now, I also did trade shares on this, but if you look at the 1 hour chart down here, when we're starting to recover, we actually get a really clean inversion fair value gap. So once again, we have the confluence now of we've swept out all the internal liquidity. We have a monthly bullish gap that's holding us up. We have some open gaps above acting as magnets or drawn liquidity, and we have an inversion down here. Now, to add to that, if you look at our weekly range, and you take it from the last obvious weekly swing low to the all-time high, you can see that we were in the OTE of the fib range, right? The 0.62. So this is all confluence for why I entered, but my actual entry was on the 1 hour chart after this inversion took place. The very next day, April Fool's Day it was, we ended up gapping up really aggressively, hitting my options target, and we continue to run. These options would have been up like 400 or 500% by now had I held them, but I don't really like holding options for that long. I take my piece of the pie and go. As you can see, up to that gap was about a 1.5 to 1. My stop was going to be below that low. And so I was very happy with this trade playing out so quickly. Now, I'm still in some shares because I picked up some shares down here as well. And those are up almost 30%. Those are still going strong. But like I said, could have held the options a bit more, but I just wanted to take my piece of the pie and run, which is a good habit in trading as it is. So that was it, right? This is a trade taken on options that you could not take on futures in any way, shape, or form, or any prop firm because MU doesn't trade there. But as you can see, if you guys followed along, it was a really high quality good probability long setup that you could have capitalized on if you trade options. Now, I will say I'm not a financial advisor. Do not trade options if you don't understand how they work. I can make an options tutorial video, but there are already really good resources out there. I'm talking 3-4 hour long full guides on how they work. Never trade options if you don't understand at least the basics, but just trying to make this video to open your mind a bit and help you understand how they're really beneficial in many cases. But once again, to just clarify, why did options make this trade better? Because I could not have taken this beautiful ICT setup on futures or on any prop firm because MU doesn't trade there, right? So this is just going to show these big tech stocks with high liquidity, with high trading volume, really do respect ICT concepts, okay? And you'll see that once again here with Palantir. So with Palantir, if you go to the daily chart, I was short for this move right here. And I don't actually love shorting that much, so I didn't hold it for as long as I probably could have. I'm more of a long person. Like, it's just higher EV to long. I know the market's in some turmoil with this whole, conflict that's going on geopolitically, but I still prefer longing. It's just something I feel more comfortable doing, but that doesn't mean I'll pass up a good short setup. So if you look at the extended hours 4-hour chart, we have this very obvious 4-hour bearish gap that confirms after an earnings sell-off. I believe this was. Yes, this was a post-earnings sell-off. And we have this swing high up inside of it. Now, what we also have is we're developing a large amount of liquidity in this area, right? All of these stacked highs on the 4-hour chart. And what happens, we make a aggressive move up, we run them all. So this probably reminds you guys, if you trade ICT, of setups you take all the time on like the ES or NQ 1-minute chart, right? It's the same thing. These principles apply everywhere. That's kind of the point of this video. And then we get a very clean rejection. And what is that? That's an inversion gap. So this is a STIM model, right? Because we've tapped into a 4-hour up here, right? We have swept out liquidity. We have an inversion, and I would say that's pretty damn good momentum, wouldn't you? So we get that. I enter one put, right? And I'll throw up the screenshot again. I ended up getting a second because we end up forming this bearish 4-hour now after that inversion. And when we retest that, that's when I go in on another contract. We get a really nice rejection right here. And then my target was just kind of this general range where we've stacked up a lot of liquidity. Really exactly about the 147 range as the bottom, and we end up getting down. Now, yes, it overshoots it. I could have held more, but I'm totally fine taking a 70% gain in the matter of like 2 days, right? 3 days. That's something that I'm going to take every single time because that's just a very, very clean trade, a clean setup. And why wouldn't I take that, right? Doesn't matter if it ran to 150%. If my target hit and the setup was nice, I'm going to take it. So hopefully you guys understand the context of this trade. Also, if you look, this was a weekly bullish gap. That's another part I should have led with here. I thought we needed to rebalance into this gap. So as you can see, the low or the high of this gap actually aligns with that 147 area I was targeting, right? So once we got up here, I figured, if I could even talk, that we would have a nice area to reject. And we did. We got an 8% sell-off off that high into the gap and then continued selling through it. So very beautiful trade right there on Palantir using puts. So this can work for puts, calls, aka shorts, longs. It just is about ICT concepts working. Options do not matter. Futures do not matter. It's just ICT. Just trade whatever vehicle you feel comfortable with that can get you the results that ICT concepts can actually bring you. So to find these setups, personally, I've built over my years trading, just knowing what stocks kind of move nice, what I like, what I watch, what actually matters in terms of just the economy and tech companies in general. I've built a list of like over 100 hot stocks. I've put them all on a watch list called Scan, and I'll look at this maybe every other week. And what I'll do is anytime I see something, I'll start on the monthly and weekly. I'll just give it a brief skim. And anytime I see a stock reacting to or right by a monthly fair value gap or weekly fair value gap, I'll start to really look and then thin it down. So right here, we clicked on Zoom. What you can immediately notice is that we have tapped into and started to reject a weekly bearish gap. We also have some pretty obvious trendline liquidity down here. And so I wouldn't even be opposed to looking at a stock like this to potentially short. Now, the daily doesn't look as clean. The 4 hour actually does look fine. We have a pretty good inversion gap here. So maybe Zoom is worth watching. Say we reach back up into this 4 hour and reject. Okay, well, then maybe that's a stock I would look to play puts on. So this is not financial advice. This is not a trade alert. Will I maybe look for a play on Zoom now that I'm actually seeing this in real time? Maybe. But the point is just look at the higher time frames like the monthly chart and the weekly chart. Okay, and have a list of stocks you scan and just go through and find which ones look like they're at a point of importance. Okay. And that would have helped you catch a short on Celsius twice, right? We were in a weekly bearish gap. We reject it not once, but twice. Okay. Two great shorts out of this weekly bearish gap. So that's kind of what I do. You kind of got to make the list yourself. And it takes some experience, just intuition. You can always set alerts, right? Just right click, set an alert somewhere, and that'll help you understand when the stock is maybe entering your trade zone because you'll get a little notification. So you can do things like that to make it easier. But overall, you do probably have to spend about, I want to say, an hour or two every other week searching for these setups if you want the best results. And yeah, you can try to automate it, but I always think the discretion is going to serve you the best. But still, I made thousands of dollars, literally over 1,000 on each trade, like over 5,000 combined between those two trades, right? And that was just off a few hours of scanning. So I could sit here and complain that I had to scan to find those, but like I'm getting paid handsomely for it because it's providing really high value, high probability setups to the upside and downside, whatever I'm finding. So the scanning to me is just a business expense or a time expense for the business. So I don't really mind it. I don't look at it as a chore. It's kind of fun and it helps you build up your intuition. Nothing wrong with some extra screen time, right? So if you guys enjoyed this video, make sure to like and subscribe. Also, I'm going to be posting a ton more educational content in the coming days and weeks, so make sure you don't miss any of it. Turn on the noties if you need to, and follow my Trading X and join my free trading Discord. They'll both be linked in the description. Anyone who engages with me on either of those platforms or in these YouTube comments, I will get back to you. I love interacting with my community. I'm still a small creator, so I have time and I make time to get back to everybody who shows love and asks questions. So I appreciate you all for watching. Catch you in the next one. Peace.